It's What the F Happened, a week in review where we rant and rave all about the things going on in the stock market and all the unbelievable craziness that's happening. Stephen and I, we're going to talk about, when does the housing boom end? Why is real estate so crazy? Does it mimic what happened in 2006 through 2008? Is the same thing going to happen? We're also going to talk about energy. We're going to talk about electric cars. We're going to talk about blackouts and brownouts and everything else. And we're also going to talk about one of the most important things, and that is how similar the market conditions are today to what they were in 1929. So folks, get ready. This is going to be an unbelievable show. And every week we do the same thing where we dissect the week in review and we talk about what the F happened. We'll see you in a minute. So how much more money can they print? How much more can they print? Well, just recently, the Senate Dems announced another $3.5 trillion budget. I don't know if you guys saw this, Stephen. I don't know if you saw this, but a $3.5 trillion budget agreement to be spent over the coming decade. More printing. Is this the money that they're going to use to fund the hiring of about 80,000 IRS agents? I mean, they got to pay for this shit somehow, man. What do you think, Stephen?
I think that we've printed over 40% of the total money supply in the history of the world in the last 12 months or so. And I think that the Fed is just hammering. Everything's great and everyone's still buying. And I don't think it's going to end well.
Wait. Can you just let's take a step back, Stephen. You talk really fast. Did you just say they printed 40% of the current money supply?
Of the total money supply ever in the history of the world has been printed in the last 12 months or so.
Dude, man, it's time to get the boxing gloves out and start pounding on this thing because, dude, like, when does it stop? Well, I can tell you right now. I mean, one of the things we do here is I study economic reports. I study a whole bunch of economists, and a lot of the economists, not the ones that I see on TikTok that say buy term, invest the difference. I don't follow them, but I'm talking about real economists that really study this, that went to school for this, and not just any economist. I'm talking world-renowned economists, and I take a little bit from each of them, and I try to find similar patterns. And those patterns all come down to some of the same things. And we're going to get into those same things. But you know what? Let's get into housing. Right here in the news, Apple and Goldman Sachs plan to do a buy now, pay later service to rival a firm. And I have something here. I'll pop it up on the screen. But, think about this. Buy now, pay later. We've seen that in car companies, where you can buy the car and you buy it and you pay later and they rob you blind. Well, now Apple and Goldman are going to do the same thing. And they're not just a small company. That's a large investment bank. And that's probably the largest company in this country. Let me put it up on the screen here for you, Stephen, because this is definitely one worth talking about. So here we go. We got it up on the screen, folks. So Apple and Goldman plan buy now, pay later service to rival firm. So what does this mean? Does this mean there's going to be more credit going on? They're going to make credit even easier, which, isn't that all we seem to see today? Printing money equals easy credit because the banks just have too much freaking money and they need to do something with it. So, oh, look at that. There's your pop-up. Let's get rid of that pop-up. We don't want to claim the offer today. And look at, they won't even let me get rid of that. They're like, no, you have to claim the offer. Otherwise you can't read the article from Bloomberg. Is this even going to come up or are they just waiting? No, look at that. How about that, folks? Like literally, I can't pull up the screen. Nope, it took me somewhere else. All right, so screw that. Bloomberg, kiss my ass and kiss Steven's ass on the way out the door too. But anyway, this doesn't make any sense. More debt, no interest payments. It sounds familiar to the housing crisis. Let's take a trip back in time, folks. How many of you are old enough to remember 2006, 2007, and 2008? Stephen, you remember that?
Oh, yeah.
When those periods of time happened, I was a financial advisor and I was at one of the peaks of my career. And I remember like real estate was going nuts. You heard about people all over the place being able to their equity and they were buying multiple houses. There was no one. I mean, no one out there that couldn't get credit to buy a house. And when they were doing this, it was driving this massive bubble, which, as we all know, turned into what we would call the Great Recession of 2008. And I lived through the Great Recession. All of you did, or your parents did, or your grandparents did, and it sucked. I almost went bankrupt. I almost lost everything. You know, the Wall Street firms like Goldman were putting together all these fancy dancy freaking packaged investments and selling them off to anybody that would take them. So it was the last person holding those GMOs and CMOs got stuck with the bag. So now what are they doing? They're creating more debt. You know, and to banks, debt's a good thing. Think about this. To a bank, debt, the mortgage that you have, your car loan, your personal loan, all of these things. My phone is just not cooperating. All of these things, these debts are assets to a bank. So they want more of them. And the Fed just keeps giving the banks more and more money, and the investment firms and Wall Street more and more money. So they're just creating more and more debt. But then when that debt gets created, they got to sell it off, because why make money long haul? Why, you know, create wealth that takes time like debt? You know, how much time does it take a bank to monetize a mortgage? The answer is they don't know, because it's too long. So they package that mortgage up along with the lawnmower loan, along with the loan for the car and everything else, and they sell it off in the secondary and tertiary markets. So who's tertiary? You are, folks. They package them up into those beautiful mutual funds that you all own inside your 401ks. Oh, yeah. And you know what happened in 08? Those blew the market up. Oh, but the Fed and the government fixed that, didn't they? Obviously not. You think that GMOs and CMOs are gone? You think that banks are actually safer drivers now than they were in 2008? Folks, you are, if that's what you think, you are living in a fantasy land. Turn on, what's a great fantasy movie that you've watched, Stephen?
That's a good question, actually. A great fantasy movie.
That's what's going on right now.
I think The Matrix could be it, Chris.
Well, The Matrix could be that. I mean, there's one I'm thinking of. It's anyway, well, that's what's going on out there. They're creating the same bullshit they did back in 2006, 2007, 2008, packaging it in a different little thing with a different colored bow tie and selling it back to you in your 401k, in your Robinhood account, in your brokerage accounts. Folks, what does all this mean? Well, if you really look at some of the economists like this one here, let me read something, Stephen. The second housing boom is a totally different animal. He's referring to 2008's housing bubble, and he's referring to today's housing bubble. Not only did housing long ago peak for the latest or the largest generation history, but the central banks pulled out all the stops to push interest rates to near negative. So why is this real estate bubble, or why are your prices of your house skyrocketing? Low interest rates are one thing. Demand is another thing. Everybody wants to get a bigger house, move into something else, because you got the FOMO, the fear of missing out. You're going to miss those low interest rates. Hurry up, sell your house and move into the way overpriced one. Anyway, I'm getting way ahead of myself. But he says that everyday home prices, so the median everyday home price, follow this, is a whopping $394,000. That's across the country, okay, across the nation. $394,000 is the everyday home price. But now you might be like, okay, yeah, Chris, what good does that do me? Hear me out. That was $199,000 in the top of the last bubble. So think about that. We're at $394,000 is the median home price. And back in 2008 at the top, before it all crashed, it was $199,000. Even adjusted for inflation, okay, and higher incomes like we have today, that means that house prices are 5% higher than they were back then. Now, most of you might actually think about that and be like, oh, well, that doesn't look too bad, until you actually look at a chart like this, okay? So any of you looking, that's the chart. Check this thing out. Does that look normal? Like, should the pricing go straight up? Is that normal? Nope, that's not normal. This housing collapse, this is from The Economist. Now, hear this. This housing collapse obviously will be greater than the last one, which took average prices down 30%. And that was higher than the Great Depression, folks. The Great Depression, housing prices only dropped 26%. I know, but you might say, oh, it was different back then. That's what I always hear. Oh, it was different back then. Well, maybe a little bit. But he is predicting a downturn that will end up being a short depression in 2023, and that housing prices will fall more like 50% this time and will never recover from present day highs. You don't like the sound of this? Good. Keep living in your fantasy bubble. Keep living in the Inception world, the Matrix world, because you can live any way you want. You can just go about your life until it's all over and you get punched right in the face. Because, you know, what did Mike Tyson say, Stephen? Didn't Mike Tyson say something about getting punched in the face?
Yeah, it's all good till you get punched in the face.
Yeah, everything's all good until you get punched. Pretty good statement from a really smart guy like Mike Tyson.
And I do hear that a lot, though, Chris. You know, that it's different time. The housing market is different this time. History always repeats. I don't care what the driving factor is. Maybe they were giving away a lot more free loans back then, but guess what they're doing now? They're giving away the lowest interest rate loans in the history of the country. I mean, I just read an article this morning. Weekly mortgage refinances spiked 20% after interest rates drop again to February low. I mean, they came down to 3.09. So the Fed is just controlling it, just dropping rates. They're forcing people to push these applications through. Overall applications are down, though, from last year. So it's all the signs are there. I don't care what the underlying circumstances are and driving forces are. They're driving it all the same, and it's not going to end well.
Well, Lynn coming in from Facebook said, so should I sell now and buy in a few years? Well, if you listen to this economist, that's exactly what he says right here in bold. It's crazy, Lynn. Here's what he says. Sell now or be stuck with that home forever and hunker down for the crash and the financial crisis of our lifetime. Now, this economist is a bit, drastic and a bit, kind of just out there, but it's still an economist, not just an economist, a world-renowned economist. So he is saying sell now, but you know what? So is Warren Buffett. Warren Buffett says what? Buy low, sell high, and don't lose money. Like, I'm selling off most of my rental portfolio. We went from 91 rentals down to under 20, and one was supposed to close this week, and it didn't because the banks are assholes. But anyway, we won't go there. So what should you do? Well, I don't know. It's tough. When you're talking about a house, you're talking about where a family lives. You're talking about the place you grew up in. You're talking about your home. It's not always looked at as an investment. Your home is where you live. So if you sell it, where else are you going to go? Stephen, we have this call all the time with our clients. They're saying, well, should I sell my house? And my question is always, okay, if you sell your house, even though you sell it for top of the market, where are you going to go? Oh, well, I'd have to buy another house. Okay, so you're going to sell high and you're going to buy high. That makes no bloody freaking sense. You'd be better off just keeping your house, making some biweekly payments toward that mortgage, or using, something like the infinite banking concept to pay that mortgage down. But anyway, not going there.
And Chris, if your mortgage is down here right now and all of a sudden your house value spiked to the highest levels in history and you're expecting that to come down and you don't want to move because you love your house, or, like you said, where are you going to go if you do sell? Why not take advantage of that spread? Take advantage of that equity. Get a HELOC. Get that money to work. Maybe dump it into a policy first, but get that money to work. Create profit for yourself. Cycle that back into your own private bank or into your savings or wherever you put money, or reinvest it. Keep the money growing while you can. Because once it comes down, those HELOCs are going to go away. That equity is going to go away. You're not going to have that free, lazy money to put to work anymore. So take advantage of it while you can. And if this doesn't happen until 2023, you have 2 years of $200,000 of equity. How much equity do you have in your home? Do that at 10 to 12% a year with a simple passive investment loan into something affordable housing or quick flips or something like that. And boom, you're all of a sudden generating, I don't know, 10, 20, 30, 40, $50,000 a year for yourself. Do that.
Dude, that's a great idea. And literally, like, you took the idea I was coming up with right out of my mouth. But this is what we always talk about. What do the wealthy do different than we do? They move money. They know how to move their money like the banks do. But what do? We get excited because we have it in our house. We get excited because on a piece of paper, we're looking at, holy cow, look at my 401k. It's up 30%, until you get punched in the face and your 401k is down 30%. You see, the thing is you're only up until you lose it all. And the only way to basically play the game and make sure that you don't lose it all is to follow some simple rules. If you have a house that has equity, you should tap into that equity, but only if you know where to put that money. So if you have a home equity line of credit, let's say you bought your house at 100 and it's worth 200, you got 100,000 in equity. You could probably access 80% of that, or $80,000. Now, what would you do with $80,000? Let's just do a quick little lesson. If you had $80,000 available in the rafters of your house, what would you do with that? You know, I don't want to be mean here, but you know, the not so smart people would be like, oh, honey, let's put a new kitchen in. Let's put a new bathroom in. Oh, I've been wanting that man cave. And oh, that new Corvette just came out. Wrong, wrong, and wrong. What you should do is look at where all your money goes every single month. Do a budget, income, liabilities. Let's look at what the liabilities are. Oh, we have credit cards. We have credit card, line of credit, personal loan, car loan. Great. Let's put them in order from lowest to highest. Lowest debt, like lowest balance, to highest. And then let's start knocking those out. Let's take that 80 grand that we got that was sitting in the rafters of our house and let's pay off the credit cards one after the other. Okay, but then let's not stop there. Let's take this same dollar amount you used to give to Visa, Discover, Amazon, all those credit cards, and take that same amount once you pay those cards off and pay that money back to your home equity line of credit. Take that money and put that money in your privatized bank. Take that money and recapture and recycle it and just go right down the line. Now what you've done, folks, is you have begun the process of building tremendous amounts of wealth, and you didn't have to work any harder. You didn't take on any risk, and you didn't lose control of your money. All you freaking did, I mean, what the F? Folks, you're watching What the F, and I can't say the F word, so I wanted to. But what the F? That's where your wealth goes. You give it all away to somebody else. Take that shit back. And it's very easy to do. Just told you how to do it. And you don't like that? Go to my website and watch a video on how to do it. So simple. That's what you need to be doing. You need to be learning how to build wealth. And the simplest, easiest way is take your lazy money, put it to work, and then recycle and recapture the money you're giving away. Voila. How much do you give away each month? What's your car payment? How much you give into those credit card companies? How much you give into those personal loans? Oh, I'm sure you got one of those Apple phone loans or Samsung loans. Where is all your money going every month? Well, what if we didn't owe all those people money? What if we used the lazy money sitting in the rafters, or that lazy money sitting in that stupid 401k that you should sell high, and you move that money over to pay off all these debts? And then you took those liabilities and you convert them to an asset by simply paying yourself back the same amount you were paying them. Like, how freaking easy is that? Yes, folks, that's the secret. But Stephen, let's go to round two here. We got something else we got to really talk about. And this woke me up this morning right here. Okay, so folks, I don't know if you guys can see this, but I really want to first help you understand something. Number one, I'm a nerd. I'm a numbers nerd, and I'm a history nerd. And I don't like to openly say that because I kind of sometimes look like, you know, I don't have the glasses, the big, you know, Pepsi glasses, but I am absolutely a nerd when it comes to studying history, because I am a firm believer, just like every economist I've ever seen, that history repeats itself. When? That's the magic question, but history will repeat itself. So if we look at the patterns of history and we then try to figure out how do they lay up next to what's going on today? Well, you know what? Somebody else did the work for me. Check this chart out, Stephen. This is wild. But this is 1929 versus today. Okay, right here. This is 1929, the orange. I just want you guys to look at it. And clearly, I just want everybody to realize that right there, that's the Great Depression. This right here is 1929. But let's focus just specifically on one part of this. Okay, so we all know what happened in the Great Depression. It sucked. You know, it was a terrible period of time, one of the worst crashes of the market ever and the economy. And it lasted for a very long time. But I really want you to look at this. And then I want you to look at where we're at today. Now, this chart is only up through May. Now, I know I'm behind by 2 months, okay? Because now we're in July. But this is as of May. So just look at 1929 versus today. This is today. X marks the spot right here, okay? So this is what the market has looked like since July all the way through May, okay? That's today. This was the Great Depression. How many of you think that kind of looks the same? Does that look the same? TikTok, Instagram, Facebook, YouTube, does that not look like the same damn period of time? Like, come on, am I making this shit up? No. And then I want you to really focus on this period, okay? Forget all the rest of it. That's not important. I want you to look at this right here, okay? This is 1929 right here. Now, many people think that the Great Depression happened all at once in 1929, but it didn't. The Great Depression, just like COVID last year, took an initial crash. And then, unlike today where the Fed jumped in and stimulated it, back then it was the big banks. It was the guys with all the money. They jumped in and plowed money in. They backed all the margin accounts and they said, we're going to put $100 million toward this credit. They were stimulating the market because there was a lot of people, big bankers, that thought the markets were going to keep going up. They were trying to prop it up. They literally had an ego the size of Texas that said, we can keep this market where it's at. Clearly, history will prove that they couldn't, but that's what they did. They propped the market up, and this is what you got. Now, this doesn't look like a long period of time right here, okay? I want you to look at that. It doesn't look like it was long, but it was actually quite a bit of time from there to there. They would call that the V. Very similar to last year in COVID, from there to there. And it just, during that period of time, when the market bounced and came back, it was the summer season, people were out there, they're partying, everybody had money, everybody's making money in the stock market. If I'm not mistaken, it grew almost 50% in that short little period. Okay, whoa, let's time out for a second, Stephen. How much has the stock market grown since last year when the whole world shut down due to COVID? Is it 50%? Is it 30? Does anyone know? It's a lot. That's the only thing. Just like 1929, it almost looks identical. Look at this. This isn't superimposed right there and right there. But then what happened after that? After the summer season, after everybody went to their vacation homes and everybody was rallying and making a ton of money, that's right, folks, it crashed. It completely crashed and created what we now know and remember as the 1929 or 1932 Great Depression. But it didn't end in 1932. Okay, I want to be clear. It continued to kind of go sideways for almost 30 years. So what's going to happen now? So are we coming up to what would be the next Great Depression? I don't know, folks. Really up to a lot of things. Is the government going to continue to keep stimulating the markets? There's just so much crap going on. But you know what? I want to turn the attention to something else. I want to talk about the Olympics. Stephen, let's hit the Olympics. What do you think's going on with the Olympics? Do people even know that the Summer Olympics are going on? Like pretty soon, like I don't even think people even know that.
Yeah, it's they were canceled last year because of COVID, and they are having them this year out in Japan, and they just recently announced that they're not going to allow any attendance, any live people inside the stadiums or anything. I guess they're having a lot of challenges with COVID and everything going on still over there. And it's just amazing to see that, some of these countries are still having such major, challenges with COVID. And the United States, I mean, you guys have seen what's going on. I mean, in Vegas over the weekend, there was a huge fight with Poirier and Conor McGregor, where McGregor got his ass beat, which was awesome. But not to talk UFC, there was a country concert going on. But Justin Bieber was out there putting a show on. There was literally hundreds of thousands of people side by side. We have no issues right now. Everything's good. Delta Airlines just had its most profitable week in years since before the pandemic because people are starting to travel again and everything's wide open. But yet over in Japan, they can't even allow a few fans into the stadiums to watch Olympic events. They're going to lose hundreds of millions of dollars. It's absolutely amazing to see what's going on in different parts of the world.
It is. But yet you got the Olympics and they're making some, I think, big mistakes there. So let's just look. We've got breweries pledging $100 million to sponsor the Olympics, and you got all sorts of stuff happening here. But
yeah, envision stadiums full of people. If you keep reading there, I mean,
no spectator rule limits marketing opportunities. It's gonna be interesting. The only reason I wanted to bring up the Olympics is most people don't even know the Olympics are going on right now. So does that tie into the markets? Well, it kind of does, because it ties into this insanity that COVID has created in this fear, and it's just kind of stemming all the way through to things even like the Olympics. So the other thing too that I thought was worth talking about, we hit this last week in What the F, but you know what, it still hasn't gone down. And just this weekend we had a live event here in Buffalo, New York, and we had 3 power outages. The power, for no apparent reason, just flatlined. They call them blackouts. We had blackouts. We were literally doing the training with lights from our cell phones. But there's a couple other places that have a lot of these kind of blackouts. Let's talk about California. Stephen, you know a thing or two about California and their blackouts and brownouts, right?
Yeah, it's a big problem out there. I mean, when there's a lot of pressure on the power grid. They don't have the infrastructure in place to supply. They've gone, into a lot of green technology and new technology, and they're really relying on it. It's not always as reliable as we want it to be. So they've had a lot of challenges. I know, Texas ran into some challenges this last year and caused some deaths and things like that. So it's an interesting time when you're seeing, we talked about it last week, just how, these people have so much invested themselves into this green energy and making this work and making it happen. And it's, there's so much debate there, whether we're ready for it, whether, it can actually sustain, our lifestyles. It's rough when you're losing power, especially when you live in places like Florida and Southern California and Texas in the summertime. It gets hot, and I know it gets hot all across the country, and it's just, that it kills people. It's crazy.
An interesting thing, is Texas. This is another report here. Texas operates its own electric grid to avoid deregulation by the FERC. Texas is like its own country. They try to just kind of not have anything to do with anybody else, and they try to do it themselves. Now in February, yes, they had a deep freeze. That deep freeze wasn't just Texas. It was many states down there, and their power grid couldn't handle it. But other than that, I haven't really heard of any brownouts or blackouts in Texas similar to what I see in California. Now, I live in Buffalo, New York, and if any of you know, we have Niagara Falls here. One of the wonders of the world. Niagara Falls produces an ungodly amount of energy. We have a giant energy plant, and we go fishing down there. It's actually scary to see because it's so big. So we produce a lot of energy, but one of the things that's interesting about the energy we produce here, it's 10 minutes, from where we live, 15 maybe if you're driving slow. And because we produce all the energy, you would think we'd have cheap energy. Absolutely not. Our energy doesn't stay here in Niagara Falls and Buffalo. They ship that stuff to New York City. They ship it out to Florida and to California, wherever they need it. Our power doesn't stay here. But here's the thing. The state of California, and I'm just going to read off this, produces enough energy to meet demand. That's a lie. It does not. A report showed that in 2019, California generated 202,000 GWH, what is that, gigawatts, I think it is. I'm not an energy guy. Gigawatts, but consumed 250 gigawatts of energy. Correct me if I'm saying that wrong. But the state imported the rest. So this is a touchy subject. And the reason I'm picking on California, because California in 2020 suffered severe brownouts and blackouts. And that was because they can't so much create the power they need. They have enough power, but they don't have enough power at the right times, because at the right times, that power is all getting used. For example, in the mid-afternoon when it's 100 degrees, it's not just 100 degrees in California, it's also 100 degrees in Arizona and in other places out there. So when they need the power, they don't have the power. So California actually came up with the California Independent System Operator, which is obviously appointed, and to no surprise, the commission is very one-sided. So what they did is to meet the demand, they started prioritizing where power went. So when California is having power shortages, they basically get precedence over Arizona, who probably is also having power needs at the same time. So now, instead of California having brownouts and blackouts, you'll probably see Arizona with the same brownouts and blackouts, because California is only generating 80% of the power it needs. So why do I even talk about this? What a boring topic, Chris and Steven. Here's why. There's a giant push for electric cars. So now the grid's already strapped. The grid's already stressed out. Here in New York, we have problems with some of our grids. And now what we're going to do is we're going to basically have every car manufacturer pump out electric cars. We're going to replace those inefficient, gas-guzzling, carbon-producing monsters, i.e. my truck, which gets 8 miles to the gallon, and all these other cars. We're going to get rid of them, and we're going to bring in these electric cars, which are great for the economy, great for the environment. But how are we going to charge our cars? Peak day? Are you going to just have to sit there and be like, oh, I'm out of energy, and oh, there's blackouts, we can't use our power? Like, California limits the amount of power. And now they're going to all those like automated thermostats. You don't think that they're going to have the ability someday, they do now, but someday to instead of your house being at 70 degrees in those hot days, they raise it to 78 because you can't use that power. You don't think that you are going to lose control of that? Well, if you've got an electric car and it's during those peak times when they can't produce enough energy, how are you going to charge your car? You going to walk? Is your car going to come with an auxiliary bicycle? Is that going to be the add-on feature for the new Teslas? buy this new Tesla model and get a bicycle so that when you can't charge your car, you're not on the side of the street. Listen, like, I like Teslas and I'm all about the electric car thing, but literally, can you go from where we're at to where they want us to go in T-minus 60 seconds? No. You can't build the infrastructure. You can't build the power grids. You can't increase the power supply fast enough for the demand. So are we going to see more blackouts? I don't know.
Is this something that Tesla's working? So every time I bring up Tesla, like, to me, Tesla is the most overvalued company on the stock market almost. It's, I mean, what their PA is like 680 or something. I was looking at it yesterday. I was just trying to figure out, like, what is up with Tesla. And every time I talk to my friends that are pro Tesla, own tons of Tesla stock, they always tell me it's not the car. I mean, the PE in the auto industry is what, 20 typically? There's a 6.8, like, it's crazy. So they're valued at more than every other car company in the world combined, Tesla. So they always tell me Tesla's not a car company, they're a technology company. Okay, so what technology is Tesla building that's going to solve these issues? Is it the batteries? Like, is that really what's going on? Or is Tesla really that overvalued? Like, this is a stock show. What do you think about Tesla, Chris? Not should you buy or not. What do you think about just the company? Like, what are they doing?
Well, I like the company and I've invested in Tesla. I've sold all my shares because, just like you said, I feel like it is crazy overvalued. You know, but then people say, oh yeah, but they're going to space. They're going to go to Mars. Okay. Yeah. But like, that costs money to do that. And that's not going to probably, you know, we're not going to see the fruits of that until after I'm well gone. So like, how is Tesla valued so much? I'll tell you how. The same reason the stock market is going straight. The markets are driving on everything but fundamentals, everything but actual real data. What the markets are driving on is investor confidence. So Stephen, Elon Musk is a smart guy, no question. Tesla is a unique idea. SpaceX is a pretty awesome thing, but it's all driving consumer or investors' confidence in the company. So the more confidence people have in Tesla and in Elon, the faster that stock goes up in value. Again, until, like Mike Tyson says, until you get punched in the face.
I'll give you a great example. I just read this earlier. Let me just pull it up real fast. But I'm talking about not SpaceX, the other one, the Virgin Galactic.
Oh yeah, Virgin
Branson. So he's been all over the news, right? Yeah. So Richard Branson was the first guy to go into space this last week. Did you see that, Chris?
I did. Yeah.
Yeah, so they launched him up. I guess there's debate whether he was actually in space or just below. And I know Bezos is going to actually go really into space in the next couple of weeks or something. So that's kind of a fun little challenge. But just to give you an idea, just because of all the news articles and all the talk and all the hype over Branson going to space with his Virgin Galactic thing over the last week or so, the stocks went from 16 up to 56 in the matter of that week news cycle right there, just because of the hype and everything. Now it's come back down a little bit, down to 37 in the last 3 days, but it's just like, there's 0 sense in the markets right now. And if you like the idea of investing in something that makes 0 sense, I got to question your, I don't know, intelligence almost. I don't want to say that because it's easy to get caught up in it. But what are you doing, man? It makes no sense. It's crazy.
Yeah, no. Listen, like, sometimes you just gotta, you know, the truth hurts and you just gotta punch people in the face, I guess. So stupid is the right way to say that, Stephen. And we don't need to dance around this one, because really a lot of people that are investing in certain things right now, it is pure stupidity based on absolutely no facts, no fundamentals. It is based on absolute speculation because they're afraid they're going to miss out on something. So Richard Branson goes to space. He's awesome. I love the guy. He's always been an idol of a lot of people. He's in space. Does that mean the stock should skyrocket because the dude took a little trip up to space? Stephen, I got an idea. Let's come up with a company. Let's take it public. And then let's just pay some Russian company to fly us into space. Maybe our stock will skyrocket too on absolutely nothing. We'll pay for that trip into space, because I guarantee you we can find some company that will take us into space with one of these, you know, buy now and pay later situations. Maybe we can do it on credit. Maybe we can get Russia or some Russian space company to fly us to space on our credit. And then we'll just say, hey, we'll pay you later when our stock goes from 0 to $100 a share, because we did a TikTok or we did an Insta story from space and said, hey, buy our stock. Look at, we're in space.
You're not thinking big enough either. We're going to the moon, baby. Forget space. We're going all the way to the moon. Let's do it on credit.
This is what the F. Why are we talking about space? Let's go walk on the moon.
Yeah, baby.
there's some aliens up there that they're not telling us about. Oh, actually, that was in the news too. Did you know that there's on the moon? Like, I didn't know this either, but recently I saw an article, probably not a real one, but hey, you know, they went there and saw aliens. Anyway, I digress. I'm just joking here, folks. We're having some fun with you because this is What the F Happened, a week in review of the markets where we rant and rave all about what's going on. I hope you guys are enjoying this. Let's get to some of these questions. Let's see. So Lynn says from Facebook, no, the whole green energy thing is dumb. Okay. So I like this because we are not ready to sustain it yet. I agree. We have solar on our house, but we try to go only green. If we try to go only green, it will not work. And, you know, a lot of people put in solar. This is somebody that has solar on their house and they're saying it's not going to work for fully going off grid. So is it possible for us to really go off grid? I don't know. It's interesting. I think someday we'll be able to do that. Let's see. Do they let you sell your energy back to the grid, Lynn? That's an interesting question. Colleen was asking, you know, the other person on Facebook, are they allowing her to take the energy she's not using and sell it back to the grid? Because those people in California need to charge their Teslas. So please sell your damn power back to the grid so we don't have these blackouts anymore.
Yeah, they do that in Florida. We have FPL here, and it's one of the best energy companies in the country.
There we go. You know, why is it that everything in Florida is the best in the country every time we talk?
I'll let you come up with your own conclusions on that one, but I got my own opinions. I won't get into right now.
I'm going to stay away from that one for today, but we'll get that next week. Let's go to the final thing. I'm going to share my screen here, and we do this every single week. The greed index. Folks, you've all heard this before. When others are greedy, be fearful. And when others are fearful, be greedy. So we look at this index. Index tracks this, and it says, where are we on the fear and greed? So we are at a 39. We're moving more toward the fear. Does that mean that stock prices are coming down? Not really, a little bit yesterday. But if we get too far into that fear, the fear will drive reaction, which will drive people to sell out of those stocks. Because remember, people that buy high, what do? They buy high and they sell low. And then the smart ones do what? Buy low and sell high. So we look at this fear and greed index. So the previous close was fear at 39. 1 week ago, the fear was at 41. So we're slipping and going more over.
Well, here's my new opinion on this index, Chris. I just learned it's from CNN, and just like all the other news from CNN is garbage in my opinion. So I'm no longer going to be talking about the fear and greed index. And that's my statement for July 14th, 2021. All
right. I love it. Well, Catherine here something, and she has solar and she loves it. My friend Bob put solar panels on and he loves it too. My bill was $2.95 in 108-degree weather. Now, sign me up for that one. But are you able to sell your power back to the grid? And that would be the question we were trying to get. Let's see, we got another one from Facebook coming in here. Julie said, yes, but they buy at pennies and sell back at dollars. Oh, it sounds like the banks. See, you all give control to the banks, and what do the banks do? They turn around and give you back your money 400 to 1,300% more than what they're paying you. Sounds just like the energy company. You know, you ever think maybe there's some connections here? We get nothing for our extra solar we produce and sell back. Them sons of bitches are ripping you off, Julie. Anyway, let's see. We're all coming to live near you in Florida, Stephen. All right, you got some followers, and they're all coming to you. Let's see, a couple of years ago, we got money back, but now we have 2 extra people. So my electric bill last year was $750. We used more than we generated. Well, Lynn, at least it was still pretty cheap, you know, so I guess you got some things that we can do there. But, you know, whether it's the fear and greed index, whether it's comparing 1926 to 1929, right up to today's patterns and what's going on in the stock markets, whether it's Branson or I don't know, who's going to space next, did you say? Bezos is going to space pretty soon. Mark Zuckerberg will be up there. It's just going to be one party. Let's get Coolio and Snoop Dogg up there, and then we got ourselves a real party. But
all the human aliens are going home.
Yes, I think the party begins when we make it to the moon and start partying like it's 1999 all over again, because it's going to be partying like it's 2022, because then after that, it's all over, and we're just going to stay on the moon with Snoop Dogg and Coolio, and we're going to have a good old time. So, folks, I hope you guys enjoyed this episode and this week's version of What the F Happened. Join us next week, same time, same place. All right, if you like that video, make sure you check out this video right now. And also, don't forget, subscribe to my channel, and don't ever forget to smash that alert button. We'll see you on the next one.